Good morning, investors. My name is Louis from the COSEC research team. Today is Wednesday, the 4th of May, and here is your pre-market wrap. Yesterday, the Australian stock market dropped 0.43% as the RBA handed down their first rate rise since the pandemic began, putting their central cash rate at 0.35%, up from 0.1%. While in the US, stocks ended the day slightly higher as the US heads towards its Federal Reserve May interest rate meeting. The Fed is expecting to hand down a 50 basis point increase, up from 0.25%. For once, markets are quite clued in what to expect when it comes to rate rises. Deutsche Bank has reported overnight on the strength of US earnings growth despite the headwinds facing US markets right now. Earnings growth is in line with historical norms at about 11% annually, while margins also remain strong. Despite this, the S&P 500 is down around 12% this year. Legendary investor Ray Dalio attributes this pullback to a bursting of a bubble in a small basket of highly overvalued stocks, some of which include Tesla. In Europe, the Stoxx 600 rose 0.5% with a jump in oil and gas stocks, led higher by shares in BP, which rose 5.8%. The Russia and Ukraine conflict continues to disrupt global energy markets, particularly in Europe. And in Asia, Chinese markets are closed for a holiday, with trading to resume on Thursday. And in commodities, the rally in metals prices has most definitely cooled, with the world's largest commodity consumer still suffering from strict lockdowns. Aluminium and tin are down more than 17% from their recent all-time highs, while zinc and lead are off 12% and 11% from their year highs, respectively. Finally, for this morning, our SPY futures, they're trading 0.59% lower at 7,328. This market wrap has been brought to you by COSEC, Kadari Securities.